Hey, everybody, welcome to July 3rd's Principal Profit Trader Coaching Call. And I wish I could wish myself a happy 4th of July, but unfortunately, I have to go back to the drawing board. I What happened today to me is 100% a reminder in the face that you need to follow principles to profit. It's way better to have a shorter term strategy where you have risk management and everything in place. I do have certain things that I just invest in, like, gold or whatever, like you just do a buy and hold. But when you buy and hold on these micro caps, I mean, this thing got rugged. I put $57,000 into this coin today and it just rugged. Okay. This thing got absolutely destroyed. So it's like I'm trying to forget something that happened that I made a decision 5 years ago on an Elon trade signal where he said, "Hey, this thing's going to get you $2 easy." I bought it 67 cents. Well, now it's less than a cent. And yeah, it's a micro cap, whatever. But lesson learned. I stayed in that community, helped out that community, listened to that community. I don't mind it if it's just losing value, but I don't like getting rugged by the owner. You know what I mean? So I don't know what. Look at this thing down 51%. It just got delisted off Binance. Lesson learned. I should have just put that 57K into my active trading account and just had a higher account and just risk getting you know, hacked on the exchange or bigger losses psychologically, whatever. Lesson learned. I've been staking this one for years. Many times I could have cashed out and just compounded it into something else like Sweetie or even added it, but I believed in the project. This is why you can't trade on belief, guys. And even the technicals can't beat just crime. Like here's a bullish divergence. It doesn't matter. Everyone's buying today, and this thing's down 51% after it's been down so much. So anyway, that's why I'm kind of off today, and I can only trade one side of the market because I had to just say, okay, I'm in a huge fight or flight state. I'm trying to organize a group to do something. It's a Netherlands based coin, but anyway, I still have to just be in the present moment and trade my account. And I think the signal that I gave today was here. I can't remember if it was here. You see how I shouldn't even be trading after this really got rugged bad today? Because then the CEO also announced that he's quitting. The dev announced he's quitting. It's like they all just disappeared. And I'm like, what the heck? I've been so supportive. Anyway, I had to just still make money and give a signal. I bought here. Granted, as I'm doing this, I'm thinking, okay, this is initial support, but technically, if we go on the daily, I am going long against a major resistance zone, which I don't like or normally don't do because I should be going short at a major resistance zone here, right? I broke this up into two different ones. Okay. So, but the idea is that it's not just I can short there. Why was I able to go long when it bounced back here initially? Is because of this bullish engulfing pattern that potentially formed a mini bounce breakout pattern in the short term that was at least going to pop us up there. And that's why I felt that for a zone fade for a tradable reaction, not a reversal where I think it's going to have a breakout, this was a good place to go long, and it worked out really well. We had a hook from extremes here. I gave it live, I teach it live, and I put on real risk, and I got rugged on the coin, all in the same moment. And I still showed up to do this. So I just have to. I just told my stats coach, I'm like, I got to find the good with the bad. At least I had a winning trade today. It wasn't a big one, but it's like it's a start of just recovering psychologically. So yeah, I took that right. Maybe I scale. My initial first target was right here at 900, more towards the high of the day. But after what happened and my blood pressure being whatever, I'm like, I don't want this to rotate down and deal with it again. So I took off half here, which is slightly incorrect process, but I'm a human being at this point as well. And then I took off here. And then when it popped up here, I was like, I should be shorting right now. I'm all out. And then I was like, I just got to go to the gym. I can't. I'm in this other chat dealing with this rug pull. And I'm like, well, my system said to short. And technically, this is a better trade than the long because I'm shorting into this major resistance. But I went all out, and you guys know entries are exits and exits are entries. So maybe you got the hint you could have shorted there. I didn't take it. That's why I said if you did. My system said to take it. I wouldn't have got out, didn't I? Just didn't have the emotional capital. I'm fried right now. And that was a good trade, right? Boom, boom, boom. Now, after that, I wouldn't necessarily want to be getting involved because it's just going to chop around right now. But the idea was that, and I gave the trade plan, was that yes, this is a major resistance zone. But unlike going straight line into it, straight line into it, straight line into it, this bounced first, then had a bullish engulfing pattern that broke a lot of data, which they can get, a bigger picture bounce breakout. But I also said that didn't necessarily invalidate this major resistance zone. So we would probably get a sideways two-sided day where the two energies would clash each other, as opposed to if, like on this one, if you go straight line into something, that has a higher odds of reversing because it's exhausted, right? But this one didn't. Also, this one had a hook from extremes, which is a reversal setup. This one, not quite, right? The day before. And we closed above all this. So daily call wise, we were probably going to go up, hit this, and then bounce around. So I'm preparing myself psychologically to go long and short, because I can make money. I should have made money here, could have made money there, and then back and forth. I can have a couple R or whatever. But you know, in light of what happened and how much I put on this coin back in the day, and some other shit coins that or whatever. I mean, thank God Swee's doing well and some of these other ones, but the alts are really stagnating. You can tell firm specific risk is real. There is absolutely no what's the right word? In the crypto, it's the Wild West. I can't go to the SEC and say, hey, Rick Schmitz of LTO potentially did X, Y, and Z that was not right, and that's why he got delisted. Because I mean, this initially had contracts with the United Nations. I mean, it was a legit micro cap. I just don't know what happened. The guy owns the largest notary service in the Netherlands. Anyway, I'm glad I didn't mention that too much for like this cycle's portfolio picks. The main coin I recommended was SWE. And of course, I like Sai as well. I'll look at the alts in a second, but screw alts right now. Bitcoin always moves first. And you can see we're in a situation where we're in a mature balance. This balance is now mature. Like you see how this is not really mature enough? This needed to get about this size before we broke out one way or the other. This happened to be a bigger picture bounce breakdown pattern. But if you think of the markets as a series of phases of, trends and balances and trends, and all balances end in a trend, then you could just start to think probability wise, this was getting mature. A couple of things too. Like notice that this volatility was really like one swift. But then when this got down here, we didn't really get that action reaction this candle would indicate. Instead, we started to balance near the lows. That's not the price action you want for a reversal. That increases the odds that you can get a breakdown, right? You want like this action reaction thing here. Now, on the flip side, that's not good for us here, but that's sort of good for us here because we got this little balance. We try, and I called this in the channel. Basically, the trade plan was at this point in time, I said we'll probably go down a little bit to the range lows, right? I was thinking at least here, right? But this is the second zone, which was this moving average cross. At that point in time, you have this giant V pockets acting as support, and you had a classic, which I teach, right? Zero line reject. That's a long setup, right? That was a classic long setup. In fact, the old me would have gone in early and tried to go long on trade location alone on the previous day. But since now I think in terms of time cycles, right? I said, hey guys, probably not today. Let's wait till tomorrow. And if we go look at that day, 2 days ago, you could see, if you got in here, you would have had to sit through hours of pain. You know what I mean? Oh, I'm sorry, 2 days ago was here. Hours of pain, let's see exactly what day this is I'm talking about. This is on July 1st. Oh, okay. Hang on a second. I was wondering why I was tripping for a second. I forgot I did that. Yeah. Okay. So you see, if I got you in just on a level, like the amateur trader might see this, and he's not thinking in terms of, hey, all trends will usually end in the last couple hours. Why not wait until the next day, right? This is when you could now into that next day get a double bottom. At least it's into the next day, right? You wouldn't necessarily expect it to be this type of move and break all this data, but that's giving you a hint that this is pretty strong. And the bulls really stepped in here, right? And I said that they could. I gave a bunch of reasons why. That was a super important key reference area. You can see it goes back in time and has a lot of confluence, especially the momentum. I didn't know we were going to get this giant bullish engulfing pattern, but that's okay. That's why I was usually I never go long in front of major resistance zones. I've been destroyed too many times. You really want to go short, obviously, right? But, that's not in isolation. The way price got here with this little balanced breakout pattern from the zero line reject, taking out this data, we didn't touch it yesterday. We closed here. That's bullish at the very least for a tradable reaction. And that's why it doesn't seem like much, but it's all about risk reward. So if I can get, an R out of here, risking half R and R 1-to-1, why not? And then, if it's like I said, a two-sided day you'd be shorting this one as well, which psychologically without a zone here would be harder, but really you're just up into this time frame. So it wasn't like this advanced contextual day, because some days just neutralize each other. But it's showing you how, if I just say, hey, you never go long in front of a major resistance zone, we're not taking into fact, the current market context. And this takes a little bit of time to see how this is different, than for here. Relatively straight line, higher odds for exhaustion. Resting, false breakdown, up, rest, taking out bullish engulfing. Now we're going to test it. In fact, if you can close here, right, now we have better odds to at least test up into this zone and see how that looks. Now, overall, the other thing, too, that I was factoring into my weighted probability calculations, because yes, I was giving this a strong weight coming from resistance. But at the time I took this, the other markets were all in the green. Bitcoin was still in the green, but it had relative weakness. Or maybe it was probably around break even or slightly below, but everything else was in the green. I said, okay, well, other markets are bullish. It's not like I'm fading against some downtrend, notwithstanding this anomaly, this is firm specific, not systemic risk, market risk, right? So that was one factor. And then there's also this idea that I've noticed, which I put into the rules for the zone faithful tradable reaction, which is great because it's like, I'm not going to just, hold this thinking I'm going to get a huge move. Even my exits have to have a risk reward and a context in place. And because of that neutrality I talked about, the zone fade for the tradable reaction made sense, not a reversal. And that's why we went all out here and just captured our R. And if you had the emotional capital, you could have gone short there because that was a major resistance zone. And you had a potential hook from extremes here, in, out, And then at this point, I wouldn't be getting in here or out there because for a zone fade for a tradable reaction, I want to see that quick, taking out part of the range in a short amount of time, which I have the rule written down in the channel. It's like if you can take out anywhere from like 60% ideally of the range in like 30 minutes or less, you're short-term exhausted. At this point, it was already a sideways type day. Now, the trade where I was kicking myself was this one right here. I almost gave this one and took this as an add-on because at this point in time, the intraday bias and the sustained momentum are clearly bullish. This is a trend day, right? So we can take hybrid type setups, which are based on momentum plus trade location. Whereas the one that I just showed you that I took today was just trade location alone that were fading and exhaustion and all kinds of things like that. But here, we were coming off that major zone. Everything was super up. And I think what psyched me out, this was at the first or most aggressive fib ratio, which is still okay. It wasn't, it was at, 0.236, which is fine. I really would like it at 0.382. The thing is that Ethereum was at that. Okay. So that was a zone lead. I was like, Matt, go in. It's like psychologically, I was still dealing with whatever happened. This is not like I didn't just find out about this. This has been a pending thing with that coin. So I don't know if I was just off, but I didn't take it. And that was just a freaking amazing move. I mean, that could have been, I just had to quickly get over it and say, okay, what is the market telling me now? I didn't take it. It is what it is. This was the add-on. At this point in time, I told folks not to short this zone because we're fading against the trend and we don't do that. Had good odds to break out. Other markets were breaking out and it did break out. Right? And now after that trend day, we usually just go sideways, especially when there's a major resistance zone up here. That if I would just basically copy this from the daily, and there you go. And that was not an exciting day, but if you had the ability to just go every hook from extreme or volatility spike in the volume is not, you're not thinking, oh my God, trend down, trend up. You're thinking night sideways because of those two conflicting major probabilities of the major resistance and the trend day yesterday. So that was the context today. That was a pretty basic context. Sometimes seeing these things and executing them aren't always the case. I mean, this one was a textbook trade because of the zone lean here and how this was rotating off the zone and we had the trend day. But we're still going to be able to come in and say, hey, what is the market telling me now? Even when, you miss a move or you think you make a mistake, there's going to be other opportunities. Now, going into tomorrow, I'm flat right now. I want to see how today closes. For example, if we close right here, is a pretty good chance that we can kind of have a trickle up effect and probe this zone a little bit higher. If we get a flash crash before this ends and I have some type of a selling tail, then I'll reassess and say, okay, well, maybe this testing here is going to be the reversal, and now we have to go back and test this high volume node again. So that's what I'm looking for right now. Until we break this resistance zone, it's resistance. And it's a problem. I'm not going to get involved, in the middle of a zone either way. Up here is a short, and down here is a long, and that's it on a sideways day. Here was a momentum setup that if I was in the right state of mind, the real rule is to take it here, stop here. If you get stopped out again, you take it here with a stop here, and you really would take it almost 3 times if you were really convinced of a trend day. If you did take it there, congrats. That was early. Also, you have to have it early enough in the day. This is at 8:30. So all these met the requirements to take a pullback continuation setup because it was early enough in the day. And there was enough R potential on the day. Other markets were bullish. It was trending, the sustained momentum, and the bias of the intraday was up. And it pulled back to a relevant fib ratio, which means it had good enough trade location for a short. I'm sorry, for a long pullback, and we got it. Now, when would this be a 4-star trade? A 4-star trade would be even earlier in the day, and it would be resting, and then this pattern would be breaking out above this and then pulling back into this. Then it would be like this contextually aligned pullback continuation setup that would be even better. As it stood, you had this, and then it kind of had the ability to go through it, so it wasn't, in my opinion, a 4-star trade. The other thing about a 4-star trade is that you want to have the larger time frame bias on your side. And right now, I mean, if we were really honest with ourselves, the larger time frame bias is neutral, okay? Because as we come up here, we're coming into areas where we know things can get very bearish and reverse it down again. And that's just the reality of it, and you're open to that. You might be able to take some of these on first test, like this one up here for a short. The other thing too is you don't necessarily have to, but there's always this engulfing pattern that confirms it. Golfing pattern that confirms it, and the retest, here it didn't even get that. So you can kind of wait. I'm not saying that this would be even easier to execute as a day trader, but if you're like an investor and you want to wait for a little confirmation, being neutral on the green and then seeing one swift down move, that should alert you immediately to get the heck out of the market from an investor point of view, which could have helped a lot of us on that ES daily, which I gave. I think it was around here, where I said, call your portfolio manager, get out. And then, of course, I also said that we were only going to be going long from here on out because of this inverse head and shoulders. And we got the breakout. I mean, it's just crazy. We live in a time where the S&P is actually outperforming Bitcoin right now. But if we look at the weekly, we also have an inverse head and shoulder, just like the S&P. We have an inverse head and shoulders on Bitcoin, which is very eerily similar to this potential. So even though we were waiting here for a potential breakout, if that scenario doesn't manifest and we break out sooner, which based on this bigger picture pattern here, not this time cycle one, it's a very probable, and the zero line reject, and just looking at the ES on the daily, which we just did, then I'm going to be using this not as an entry, but as an exit. Okay, so if the scenario that we fail here and then we just get a longer balance, then I'm anticipating that this is going to be something like this, where we get some double bottom low, which would be nice, or maybe not a double bottom, but some kind of bottom building here, and then maybe instead of a bounce breakdown, we get the bottom building, and then it's a breakup. That would be, I would load into that. But if we break out sooner and we get up here, then I'm going to use this as an exit point, and I'll talk about the difference. I think we're not going to wait till October to see Bitcoin break out because of this bigger picture pattern here, which is different than just if we were going sideways for a long time. So that is some hopium, at least for Bitcoin hodlers, right? But typically, what would happen in past cycles when Bitcoin got to the all-time highs is we'd see a lot more trickle-off effect into the alts, and we are seeing some of that a little bit. You know, just not crazy numbers. At least it's mostly green, but last cycle it was nuts. Anytime this got to any type of resistance like this, there was this push, but we clearly haven't had that euphoria yet. Yeah, so I mean, going forward, right? This is a place to reduce risk. If you're trading, you're open to both sides because your larger time frame bias is neutral, which makes the lower time frame context more important. And you're being nimble. A lot of my calls the last week or so have been not to trade, which is great because I think right here I said, back off everybody. Let's not, thinking, oh, let's go long because we're near this. No, let's back off. This thing now is at a zone that can really start to take off. At the same time, the way that I'm not going to invalidate this V pattern, right? The way that we got here is different than the ways that we got here these other times. So that was another reason why I said the bulls could step in here, and that was a good move to get in. And here was just an add-on, which we're all out, which is totally fine. Because at this point in time, if you're going to trade at all, it wouldn't be for a long-term position for a huddler or even a position trader. This is for like a day trader to maybe get in a little bit, get out. It's a sideways day, and potentially, initiate a short to see if we can get a bigger pullback. This thing's overextended. Now, if we do break these, which I want to break, right? The real testament to whether this is going to be a breakout or a false breakout bigger picture pattern is if we can build structure above these all-time highs. I'm going to, if this does break out here and we pull back here on a low volume day, load into that sucker big time, because then I'm doing like sort of a bigger picture bounce breakout, pullback continuation pattern into what was previous resistance, major resistance, now acting as support. Whereas, an amateur trader who's FOMOing, I don't know why they wouldn't be thinking short, but they're thinking, I don't want to miss this breakout. Should I buy more? I'm not kidding. That still happens. I know it's nuts for people that have been in the channel for a while, but they do, and you might say, well, then why did you go along today? Well, fair enough. I just saw based on how we went yesterday that it had low odds to have a downtrend day from this zone because the way that we got there was different. So at least it would be sideways. So that means both sides were open. So fair enough, right? So, I mean, that's basically the trader context for Bitcoin. If you're an investor, I would say this is a place to reduce risk for your Bitcoin for sure, and not to add to a position. And, we don't know the future, but we can control risk. I mean, one of the things you have to ask yourself is that if you are long Bitcoin and you have an investment position and you are at a really good price, you have to ask yourself, how much, or this is what you can do for any coin in this example. You got in at a great price, maybe $70,000 somewhere in this zone here. Now you're up here. You hope it gets to some magical number, but I mean, how much realistically are you willing to hold to? Basically, think about your risk reward on your exits as well. If you think it's going to get to 130,000, so that means you're not going to do anything here to hold for this much more visually, but you're willing to risk all the way down to 70,000 with no risk management. Whereas if you just used a quad exit there, you just said, okay, I'm taking off half. Now I have a stop here, break even. Next target's here. I mean, that is the principle-based thing to do. The greed person might kick in and say, well, then in hindsight, what if we do break out sooner than later? And now that position that you just told me to do has cost me money. Well, the thing about the quad eggs and what we're doing right now is we're trying to take something, we're trying to make a decision that is a principle-based decision in the present moment without knowing any future information. So it's very easy to go back and judge yourself in hindsight and say, hey, I should have done X, Y, Z differently and took on more risk. But right now, we just simply don't know. I mean, there's wars going on. There's a lot of criminality at the highest level. And you have to ask yourself, who really moved, the alts market last season? It was retail. Do they have enough money? And, will these institutions trickle over? Everything will pump, it will attract them in again. Irregardless, basic principles is you have to take profits here. That's just it is what it is. Bitcoin's at its all-time high. Now, one thing that I do like is that this hook from this zero line reject it held on Sunday, and then the retest here, right? Specifically the retest here, this is a huge sign. I mean, this thing couldn't even pierce the zero line. That means buyers stepped in big here on this pullback, which is great because now we have another chance to break out again. The more times you test the zone, the greater the odds that it breaks out, especially if it goes sideways near it, rests, and then can smash up into it, as opposed to straight line. And me reiterating these principles is pretty much the only thing you have from a purity perspective because you're dealing with uncertainty. So what we can do is reduce trade frequency, reduce trade size, and be more conservative. I was conservative with my exits. I'm not holding, expecting this to run right now, and I'm taking my profits and getting out. So that's pretty much all we can do is adjust our risk. But yeah, that's the market review. Tim, do you have any questions? Does Shimmy all go on today?
Nothing right now, no.
Yeah, I mean it's not a bad time to reduce trade frequency going into the summer. So yeah, not trading's trading, but if there's setups, I'll be on it in the future. So as I wrap here, I'll just take a look at some of these coins. This pullback continuation held, but now it's still dealing with Bitcoin at its all-time highs. Like I said, when Bitcoin was at its all-time highs, we used to see a lot more trickle-off effect, and now we're actually seeing conservative selling often. Not necessarily today, but this is not like a super insane green day by any means. Yep. Yep. And until this really starts to reverse, we're not going to see as much strength in these altcoins. Like I said, my bet is that we get at least to 100% range of this, potentially even with a one more attempt at this swing high here, which would then reverse it pretty strongly and then potentially have a lot more trickle-off effect into the altcoins, which would then attract the retail crowd to get in. Because the retail crowd right now doesn't, like Bitcoin is so expensive. Like $110,000 Bitcoin, when it might double from here in the next whatever year, a couple of years, is just not attractive to this retail crowd. I mean, they're very aggressive. They got in. What I'd like for them to do is just get into sound projects. No memes, no shit coins, coins that got invited to the White House, the real world asset, and unfortunately the AI narrative, which is inevitable. So those are the ones we're going to be watching for. Those are the ones that I still think are valid. And we will keep on it. So, all right, guys. Hope you guys have a good weekend. For those of you who celebrate Independence Day, if not in your reality, outward in your government, at least in your hearts. God bless everybody. Take care.